Hey guys, what's up? How's it going? Robin here. Welcome to today's video. And in today's video, I'm going to be going over my 18 stocks that are in my Wealthsimple Trade dividend-based portfolio. Now, before we get into this video, I just want to say straight up, first of all, that I actually got the idea from this video from Daniel from the Fire Grind. I remember I was watching him do a video where he went over his Wealthsimple Trade portfolio and he talked about all his Canadian stocks. So I'm stealing the video idea in this one, so check out his channel. He does lots of Canadian-based content and Canadian-based personal finance and investing videos, so check him out. I highly recommend it. I'll put a link in the description of this video. You guys can check out his channel, and I wanted to do my own version of his video, so I just wanted to point that out there and let you guys know that that's where I got the idea to do this video from. And if you guys are enjoying my content and you guys want more personal finance and investing videos geared towards Canadians, be sure to subscribe to the channel. And if you guys found some value in this video, please hit that like button. I appreciate it very much. Alright, that's it guys. Let's jump into the stock portfolio and let's see all the companies that I have in my dividend-based portfolio with Wealthsimple Trade. Alright guys, so we're inside my Wealthsimple Trade account here, and I'm just going to say really quickly here that this video is probably going to be a little bit on the long side because I'm going to go through all these different stocks individually. I'm going to try to kind of quickly share with you guys my thoughts, give my reasons for investing in them, and we're going to start with the Reit portfolio. Keep in mind I do have two portfolios in Wealthsimple Trade. I have a Reit portfolio, which is 100% real estate stocks, and then I have a dividend-based portfolio. So I'm going to start with the Reits, then we're going to jump in the dividend portfolio, but they're pretty much the same thing. They're just basically all made to get that monthly income rolling in. I just wanted to keep them separate so we can compare the two overall, because that's two of my case studies I'm doing a case study for dividend stocks and I'm doing a case study for REIT stocks to see the difference between the two. So the first ones we're going to go over here are the REITs. So here's my first REIT we're going to talk about. This is H&R Real Estate Investment Trust REIT. And this REIT, I think, is one of the most undervalued REITs in Canada right now. Keep in mind that all the real estate I have in here is all Canadian based, and you can see here that before the pandemic and everything kind of dropped, H&R was trading at such a high, like a lot more higher price point, and then you can see it just totally crashed here, totally went down quite a bit here, and the crazy thing is it's still underpriced. So I bought this a couple weeks ago to add this portfolio because somebody pointed this out to me about how the price of it was so low. So I'm going to be buying this one. I think it's a perfect buy right now because eventually it's going to go back up, but I just think it's so undervalued, and we have right now about $126 of our portfolio, which is 13 shares in H&R REIT, and I think it's one of the most underpriced REITs to buy right now. Next up we have is RioCan. RioCan is one of the more popular REITs in Canada, and oddly enough you can see that this one actually, if we go over the past year or so, you can see that it had a big crash too. Like basically everything, all REITs across the board kind of went down quite a bit. Some have recovered and then some of them dropped kind of bit. You can see that this one is starting to make a little bit of a recovery. RioCan, like I said, is one of the more popular ones. We have a couple shares here. We have 10 shares valued at $145. You can see here that most of this portfolio is kind of like spread across these different REITs almost evenly. And then we have some ETFs I'm going to cover at the end. But RioCan is a really good REIT. It's one of the more popular ones, and a lot of people recommend it, and I think it is one of the most solid REITs in Canada. Next up we have is RIT. This is CI First Asset Canadian REIT ETF. This is recommended to me by one of our viewers, and once again I just bought this one just for diversification, and you can see this continuing trend of these REITs going down and then kind of starting to rise up a little bit. It's kind of questionable whether REITs are going to keep doing well going in the future, but I think they're going to do good. Like I think real estate, the government is kind of helping a lot of people, homeowners, which is going to help real estate. It's going to keep the price of real estate up. It's just a kind of a question of whether or not real estate is going to go down in the future. I think it might a little bit, but I think overall we're not going to get like a major crash, which a lot of people are talking about. In fact, I think I'm going to be doing a video over the next little while that's going to talk about this. So keep your eyes open for that. But this is my CI First Asset Canadian REIT. We have 13 shares. We have $194 invested into this stock, and then going downwards here towards the end of the portfolio, we have some different ETFs, and I picked some ETFs, and once again I always am a big fan of picking ETFs because they kind of I'm new to investing, and I kind of want to invest in a broader market just in case kind of thing, and then I have like these little other individual REITs as like kind of things I'm just kind of just playing around with kind of thing. They're just a small percentage of my portfolio, but I do believe that diversifying yourself and putting the bulk of your money into ETFs for most people is probably the smartest thing you can do. So the 3 ETFs at the bottom here I have is VRE. This is the first one. This is a Vanguard Ftse Canadian Cap Reit Index. Really good fund. Pretty much all Vanguard funds I'm a huge fan of. Once again, you can see here that it was going on its way up and then took a big crash, but it's kind of starting to recover. This one actually went down quite a bit compared to the other ones. It's still priced a little bit higher, but I think like you can't go wrong with Vanguard funds, so I think it's really good. Next up we have is XRE. XRE might be my favorite Canadian REIT ETF, and you can see here once again, if we look at the prices, same thing over and over again. All these different REITs, all these different ETFs are kind of on their way up, and the nice thing about them is they just have such nice dividend yields and dividend distributions. I love it. You know, you can look at the bottom here, you can see the yield at the bottom, so 6% is pretty solid, plus with a nice gain. Some of them haven't cut their dividends yet, but keep an eye out for that. You might see some of the dividends cut in the future, but I haven't seen any of them really cut their dividends yet. But that could happen as the earnings start to go out, and we'll just have to wait and see what happens over the next little while. And the last one we have here is ZRE. This is Bank of Montreal Equal Weight REIT. This is another ETF. Once again, we have 12 shares. This was recommended by another viewer, and I really enjoy this REIT. I think it's a really solid ETF, and you guys can see here we bought it in April, and I bought a little bit more in May. And once again, for most of this portfolio, we're just kind of topping up these different ETFs with buying some individual REITs here and there. So I hope you guys like this little portfolio. I'm just kind of sharing it with you guys. Once again, I just want to kind of get through this stuff really quickly so this video isn't super duper long. I just want to kind of share my stock picks with you. So that's my REIT portfolio. Let's jump into the dividend portfolio, and let's look at my dividend-based stocks that I have on my Wealthsimple Trade account next. So here's my tax-free savings account dividend-based portfolio. And once again, guys, if you guys aren't already aware, I do a dividend investing case study update every single week, where every single week I post a video where I show you guys the different dividend stocks that I'm buying and whatnot. So check that series out if you guys want. I'll put a link in the description of this video. But here's my tax-free savings account. This account is kind of more the one I'm focusing more on. You can see here that overall we are down about 5% on this portfolio, and we have quite a bit more stocks here. I know I have a lot of different stocks, and there's a lot of different ones here. Once again, this is based predominantly off of ETFs, and then we have a few individual stocks. But this portfolio has kind of been built by me and my viewers because I'm still new to investing. I love hearing everybody's opinions about other stocks, and you guys have really helped me grow this portfolio out. So thank you very much for that. But I also understand that at some point in time, I'm going to have to kind of condense it and kind of weed out things, because I know some people recommend you shouldn't have too many stocks because it kind of complicates things and it's hard to keep track of them all. So that's something we're going to look at in the future. But I think if we focus on making the bulk of the portfolio with ETFs, I don't think we really have to worry about that too much, but we'll have to see in the future. And if you guys want to let me know about that, feel free to leave a comment in the description of this video. Leave a comment there so that maybe I can see what you guys think about that. But anyways, here are the dividend stocks in this portfolio. So the last one we bought with my last video is we bought Bank of Nova Scotia. Bank of Nova Scotia is one of the big Canadian banks. Any of the banks in Canada, I think, are pretty good stocks, pretty good investments, because they've done really well. And throughout the whole pandemic thing, they've managed to do quite well in terms of keeping their value up, and they're actually rising in price right now. So here's the stock right now. As you guys can see here, it's just so solid, pretty good dividend yield, and I think all the Canadian banks are just good stocks to invest in. Next up, what we have is Enbridge. Enbridge is a utilities and power-based company based out of Alberta, I believe. And Enbridge is, I actually did a review of Enbridge. Check out the description of this video. I'll put a link to my Enbridge review. But I think it's one of the best powering utilities companies in Canada. And they also, I think, are going to stand the test of time because they have lots of diversification and they keep increasing their dividend over time. So I think they're doing quite well. And you can see over the past week, they've kind of, they're going up and down like everything else, but they're doing really well. And I think this is going to be one of the Canadian stocks that's probably going to do the best, and they have such a good high dividend yield. I think they're pretty solid. If you look at their dividend yield, they're sitting at about 7% right now. So it's a pretty good, nice company that over time has steadily increased their dividend, and I really highly recommend Enbridge. They might actually be one of my favorite, my most favorite Canadian dividend stocks as I learn more about dividend investing and whatnot. Next up we have is Polaris Infrastructure. This is recommended to me by one of my viewers, so I bought a couple shares of this. We have 11 shares right now with a dollar value of $145. I'm not too familiar with this stock. We did a little bit of research when I bought it there, but this is actually recommended by a viewer. So this one I'm just kind of testing to see how Polaris does. We'll see how things go. Next up we have is RNW. This was another recommended from a viewer. This is a Trans Alta Renewables. This is an energy, I think it might be, was this a gold mining company? I think is what it was. And once again, I just put a couple shares to see how things go. And once again, I'm not super familiar with this one. We have a yield of about 6.5%, pretty good dividend yield, and they have increased their dividend over time. We'll have to see how they do in the future. I'm not too sure how they're going to do going into the future, but it looks like they're kind of going, you know, not doing too bad. Most of the stock market and Canadian stocks are kind of starting to come back since the big dip, so it looks pretty good. Next up we have is SIS, and this was once again another recommendation from somebody in one of my previous videos. Every now and then I like to do videos where I let people leave comments in the video, and whatever stock recommendation gets the most likes, I'll buy a couple shares to add to my portfolio kind of thing, just so you guys can help me build this portfolio out. But this is Severia Corp. This is a accessibility corporation. They build things like wheelchairs, ramps, and stuff like that. A lot of like senior-based products and healthcare products, and they've done really well. And I think going into the future, because we see there's kind of like this issue with long-term care homes and not enough support for seniors, I think healthcare and well-being stocks and healthcare stocks, especially in Canada, because we do have a big issue right now, I think that they could do pretty good in the future. This is once again just speculation, but I think they're going to do quite well, and they do have a pretty good dividend yield at about 3.55%, but they've done really well. They've almost got back to where they've dipped. You see the dip here? They've almost recovered completely from the dip, so they're doing really well, and I think going into the future, they're going to do pretty good, as well as most healthcare corps in Canada. Going down the list here, we have Shaw Communications. This is one of the first dividends companies I invest in this portfolio. Shaw Communications is an internet-based company. I don't think they're going to have any trouble anytime soon. As you guys can see, they've done quite well. They've dipped. They went through the dip, right, and they've recovered quite nicely, and they actually surprisingly have a pretty good dividend yield sitting at 5%, and they do pay out monthly. Big fan of Shaw. I actually use Shaw myself as my internet provider. In fact, in a lot of places where I am in Northern Ontario, Shaw is one of the only internet companies that we have, so I think they're going to do really well. I think they're a good pick. I don't think you have to worry about that. Next up we have is another bank. This is TD. Once again, Canadian banks, you can go CIBC, TD, RBC, they're all good picks, and they all actually have really good dividend yields. So as a dividend investor, they're really good picks because they've done really well over time. They continue to grow. They're probably not going to ever go bankrupt or really crash to any degree. Even throughout the whole pandemic, they've actually starting to recover quite nicely. And they do have, like I said, they increase their dividends over time. And TD right now is sitting at about 5% yield. So nice dividend stock there. And once again, the whole purpose of this portfolio is to keep building dividends, keep them going over time, and then take those dividends and reinvest them. That's the whole point of it, right? And at the bottom here, we have some ETFs. So we have a Vanguard Ftse Canadian High Dividend Yield ETF. This is one of the first ones I bought for this portfolio, and I've been kind of adding it over time. It's just Canadian high dividend companies. I don't think there's too much to say about that. And VYMI is an international one, so I just wanted to diversify a little bit with the portfolio. I haven't bought too many shares of this lately, so I might buy a couple shares as time goes on. But this is once again just there for diversification. And then XHD here. Oh, looks like. Scroll down here. XHD here. Oh, yeah, is a BlackRock Canadian iShares High Dividend Yield. So this is just Canadian-based companies. I believe this one does pay monthly. It's got a yield of 3.36, so it's various high dividend yield companies in Canada. Once again, this is the bulk of our portfolio, just so that we're getting a nice good mix, a nice good diversification. So if I do pick stupid stocks, at least my ETFs are going to help me out in the long run kind of thing. So that's kind of the purpose here, as I do believe that's probably the best way to invest for most people. Next up we have is XRE, especially if you're learning. If you're learning to invest, ETFs are the best way to kind of invest in the beginning, and then as time goes on and you invest in more companies like myself, maybe you can kind of change things up. Next up we have is XRE. I talked about XRE in my last REIT portfolio, and the reason why we have XRE in the dividend investing case study portfolio is because I started the REIT investing portfolio after I started the dividend investing portfolio. So XRE is just in here. I might get rid of it at some point and move it back over. Just waiting for the price to go back up so I'm not selling at a loss. And I think if I go back here, I think that's pretty much everything, because I think I'm getting into the REITs here. It looks like, actually no, we have ZWC is the last one, sorry. And this is a Canadian high dividend yield covered call ETF. I think this is a bank like insurance based type ETF. So this one is I think was another viewer recommendation. And once again, the yield is pretty solid, but that dividend yield might drop. In fact, the main test will be to see how many of these companies are going to rebound and if they're going to cut their dividends or not. That's kind of been the main test. And so far, I don't think any of the companies that I've invested for the most part have slashed their dividends, at least that I know of. At least to a really bad degree, but we'll have to wait and see as time goes on. So hope you guys liked this video. Hope you guys enjoyed it. I know it was kind of long and it was pretty, you know, not the most exciting, but I just want to run through my stock portfolio, kind of my different picks here. And thanks you, Daniel, for the idea for the video. Hope you guys appreciated that and hope you guys enjoyed it. If you guys enjoyed this video, I just want to let you guys know that I do have a monthly stock portfolio series where every single month I do an update on my stock portfolios. I'll let you guys know all my 3 different portfolios, how they're doing. Click the end screen in the corner of the screen. That'll take you to the playlist where you guys can check every single month where I do my stock portfolios, and you guys can see my entire portfolios, because I actually have more portfolios than just these 2 that I mentioned today. So check that video series out if you guys want to see like my entire portfolio and see how things are going. So thank you guys for watching this video. I hope you guys enjoyed it. Let me know what you guys think in the comments, and I'll see you guys later.